Stocks closed higher Friday to start the first trading day of April, while investors watched a bond market recession indicator briefly flash red. Additionally, the strong labor market data reaffirmed expectations for more hawkish monetary tightening plans by the Federal Reserve. The S&P 500 rebounded into the close to rise 0.3%, and the Dow Jones Industrial Average jumped 150 points after both struggled for direction during the intraday trading. The Nasdaq Composite moved 0.3% higher to mark a third week of gains for the index and the S&P 500. This week finished Wall Street's worst quarter since the start of 2020, and many are glad it's over. The highlight of the week was the brief yield curve inversion. The spread or difference between the 2-year and the 10-year Treasury note yields narrowed and inflected for the third time this week. And this circumstance has a history of predicting a recession, with each of the last 8 recessions dating back to 1969 preceded by a yield curve inversion. But don't get too concerned, as a recession may not be on the horizon for another 23 months or so. Even in the face of war in Eastern Europe, decades-high inflation, and higher energy prices, earnings have been holding up. By the end of March, estimates for the S&P 500 index earnings per share over the next 4 quarters were up. It appears that for some, inflation has been good, as more companies are enjoying pricing power as they pass along higher costs to customers. Oh, goody. And as for April, it's historically been a strong month for stocks and has produced a positive return for the S&P 500 in 15 of the last 16 years. So, what do the charts indicate? Well, let's take a look. And today we're going to look at one chart, which is the 3-year weekly chart on the spiders, the SPY, and the close on Friday was 452.92. And looking at this, let's draw these channel lines here. The bottom trend line, not a straight line, but you get the idea. And then the top channel trend line. And once again, it's not very straight. But we can see here from the top, we came on down. And looks like we're bottoming and basing and actually starting to head on up somewhat predictably. Now, as I talked about in previous videos, this level here is where I expect some resistance, and I think we're running into that resistance right now. We're over here at this point. So we need to move through that resistance point, but before then, I think there's going to be a hesitation. I think the probability is a hesitation and maybe a slight move down in the markets. Let's take a look at volume. Doesn't show us too much. And then here in the MAC, and this is what I'm talking about, is the fast line is moving up towards the slow line, but there's still a separation here even after several weeks of upward movement. And that separation is enough space to make room for some volatility. Now, we are strong. We're near that zero line, but there is a little bit of weakness perhaps in the near term. In the longer term, I expect the fast line to move up and through that slow line and the market to continue on up. Down here into the histogram, you can see nice bottoming, basing, and the move has been relatively sharp over the last 3 or 4 weeks or so, but I think we're going to lose a little bit of steam when we try to move through that resistance level. Here in the price rate of change, it's under the zero line, but we're closing in and things are starting to strengthen, but I think we'll have some sawtoothing along here before we definitely break up and through that zero line. Moving down into the RSI, we're at a moderate 55.83. We have moved above that 50 or midline, but expect a sawtooth here. I think that again is the greatest probability, as perhaps a bit of retracement before we sawtooth our way back on up. Into the stochastics, you can definitely see improvement in the market, bottom basing, a sharp move for the fast line, moving up, slicing right through that slow line, heading up to that 50 or midline. So definitely things are improving, but still I think there's a bit of volatility ahead for us and a bit of backwards movement and a bit of trench filling. Moving on down here into the Williams, pretty much the same thing, definitely in good shape, moving on up through that midline or 50 level, heading on up. We're still not into the strongest level, which would be above that negative 20 to 0, which is the overbought territory, but I think it wants to go there. It's just going to take a little bit more time. What do you get when there's a war? Definitely some hesitations in the market, and that's to be expected. Moving back up here into the price chart, and one last look, and I think that shows it all. And for today, that's ChewDog Charts. Thank you.